going on, YouTube Nation? This is GB Merce. We're going to discuss Realty Income. This is one of my favorite REITs. This is one of my favorite dividend stocks that I own. I sold a bunch of shares. I think I sold right around 100 of my SPHD shares for Realty Income. It is a member of the S&P. It is a member of the S&P High Yield Dividend Aristocrats Index. This, in my opinion, is the best monthly rate that you can get out there. If you are a dividend investor, this is one of the best dividend stocks that you can have. It might be the best because its dividend has increased since it has been on the New York Stock Exchange. Look at this, 25 years listed on the New York Stock Exchange. It's monthly dividends. They call them the monthly dividend company right here. And they can back it up with statistics. Their monthly dividends are strong shareholders' returns, 16.8 compound average total since 1994, 590 consecutive monthly dividends paid, 4.5 compound annualized dividend growth since 1994, 88 consecutive quarterly increases. That's impressive. A diversified real estate portfolio of 5,900 plus properties, 49 states, which include Puerto Rico and the United Kingdom, which they expanded to, 265 commercial tenants, 49 retail and other industries. Let's talk about the monthly dividends real quick. This is why I love it. 590 consecutive monthly dividends, okay? Since their funding in 1969, the dividend has increased 103 times. 88 consecutive times, quarterly increases. Its dividend growth has been 202.7%. The compound average annual dividend growth rate is at approximately 4.5%. The monthly dividend amount is 0.227. The annualized dividend amount is $2.72. This is what I like about these guys. Look at it. They back it up. 103 dividend increases since 1994. 88 consecutive quarterly increases. Compound average annual growth rate of 4.5%. This is all on their website. I mean, this is all them backing up their facts. Dividends paid for 50 years, $6.0 billion. Look at this annualized dividends each year, how they increase. Can you imagine if you invested in them in 97 or even 09 when there was a stock market crash? That's incredible, okay? Right now it's $2.72. It is increasing each year, which isn't crazy. The yield comparison rate is the S&P is 2.0, the Dow is 2.5, the 10-year Treasury is 1.68, Realty Income is 3.5. That's pretty nice as of September 30th. Okay, here's some information. This is why they back up their facts. Monthly dividends. They pay cash dividends monthly rather than quarterly. Their business model underlies revenue stream to deliver more frequent dividend payments to shareholders. Growth. They have been growing at 4.5%. We increase our cash dividend for 88 consecutive quarters. They discuss stability. How are the dividends increased? Okay. They are increased if declared by the board of directors in a review of our financial condition. So the board of directors are very happy and they're giving us dividends. Okay. So they have information of how they lay out their dividends. Okay, they're very honest with how they're displaying that. This is increasing each month, which is fantastic. And it's right around $70 a share, $78 a share, and it's increasing. So the other issue is you might as well buy in now before it starts becoming $100 or so. Okay, let's talk about let's discuss their portfolio real quick, their management. Here's some of their management, okay? So they have initiatives. They have many things that they do. Revenue generating opportunities. So these guys are very detailed. Look at their tenants. They got Walgreens. They had 215 leases of that. 7-Eleven, FedEx, Dollar General, LA Fitness, Dollar Tree, Regal Cinemas. They have done a fantastic job with the right organizations that are paying rent. Lifetime Fitness, that is always busy. Kroger, CVS Pharmacy. Here's our diversification, which I love. Look, they even have aerospace, childcare, convenience stores, craft and novelties, dollar stores, entertainment, food processing, health and beauty. I mean, look at this, top to bottom. This is what they have. This is what they're offering. In the UK, they're doing grocery stores. They have geographic diversification. This is what I like. They brag about, I wouldn't really say they brag, they show the stats of everywhere that they're at, the number of properties. Here's my state of Ohio. Here's the percent leased, percent of total revenue, 5.2%. Here's the UK that they're doing right now. So everything that they're doing is working. And you need to really consider looking into these guys. Here's retail, here's industrial, here's office and agriculture. So they're basically their portfolio of what they have is very diverse. Here's their occupancy rates that they have and how long people pay rent. So this is pretty nice. Look at all these number of properties that are going up each year. And vacant properties, sure, that'll get filled in, so don't worry about that. I'm sure it will. Here's their team if you would like to contact them. They've been very successful. I mean, there are so many things about them. Here's their business model. They discuss their monthly dividend commitment. I will show you right now on the S&P compared to them. Realty Income is doing a fantastic job. We go O stock max. Okay, here's them growing. Okay, even in the recession they started rebounding. So they're growing and growing and growing. Okay, now let's compare them. Okay, let's compare them to the S&P right now. Look at this, 837% compared to 526% since inception. That's pretty impressive. The S&P's right here in reality, realty, excuse me, I keep on saying reality. Realty income is going up here. So they are quite impressive. This is why you need to have a diversified portfolio. You need to have realty income in it. They are involved in a lot of mutual funds as well as exchange traded funds. So these are guys that you need to consider in your dividend portfolio. I would have them by itself. Some ETFs have them in there, which is great. But these guys are doing a good job. So let's just do the Dow. See how they're doing against the Dow. Okay, look at that. Look at that. They are beating the Dow. So let's look up their dividends history. I know I showed it before, but let's just verify it. Oh, dividend history. I like Dividend.com that just discusses how they're doing. They have increased their dividend basically every time. Ugh, it's locked me out. NASDAQ is another site that'll show it. Okay, look at this. It has increased its dividends since inception. It's just going up, it's going up, going up, going up. So it's almost 23 cents a share. Look at it from a long time ago, how it's growing. Just growing and growing and growing and growing. Okay, so this is, again, this is a stock that you should have in your dividend portfolio, especially your monthly dividend portfolio. If you don't like this stock, I'll be surprised. It is the one that everybody talks about. Every website, every blogger discusses. This is something you can't say no to. I will be surprised if anybody does not have O in their dividend portfolio or have O implemented in their dividend mutual fund that's in it, or their exchange traded fund. So I appreciate you guys watching this video. Make sure you like, comment, and subscribe. Let me know what you think. O, again, is probably one of the best rates that you can own in your stock, your dividend stock portfolio. It has beaten the S&P. It is a member of the S&P. It is a member of many mutual funds and exchange traded funds. Its dividend has gone up every year. As you can tell, since its inception, it's beaten the S&P as well as the NASDAQ. The Dow. So this is something that you really need to consider in your dividend portfolio. Let me know what you think of this video. Again, one more time, like, comment, and subscribe. Make sure you hit the bell so you don't miss any other videos. This is probably my favorite stock, dividend stock out of all of them. I'm glad I got it. I'm glad I sold a bunch of shares to invest in O, because I'm actually making about what, 16 or so dollars a month right now, which will be reinvested. I think I have a lot of shares in them, but that's just going to grow. I'm hoping eventually I'll start just each month. I'm going to just start buying more shares. So I'm going to be reinvesting for a lot of years. My goal is to make I'd say about $1,000 to $3,000 of passive income. Again, if you watch my previous videos, retirement pensions are gone, so you can treat monthly dividend stocks as retirement pension. And this is a really good one to invest in. These guys do a really good job. You give them the money, they put in the work, they reward you with dividends. I mean, what more can you ask for? I mean, they're doing the job for you. This is, when you're busy and working and stuff, these guys are doing the real estate work for you. This is the benefits of a real estate investment trust and why I invest in real estate investment trusts. It's just an amazing portfolio. Many of the exchange traded funds, I know that there's a few exchange traded funds, probably if not all of them, that have O implemented in their portfolio with REITs. One, it gives off a good dividend yield, and two, it'll grow. And this is what you really want. You can go on Zacks.com or look at or review it, or Motley Fool. They'll give you the business about if you think I'm full of it. It's just probably this should be your number one dividend stock that you should pay attention to and have in your dividend portfolio. At least in the long run, have 50 or more shares in it. I know I'm not a licensed professional, but this is something that you really cannot turn down. Again, thank you for watching this video, and you guys have a nice Tuesday, and make sure you start bundling up and start putting some money in some stocks, make some money, okay? All right, see ya.